Good morning, good afternoon, good night, wherever you're tuned in from. Welcome to the BitLab Academy daily stream. I hope you're all having a wonderful day. Let me know if there's any audio, video, or just emotional issues. We're here for you. We are a community. It's not just about crypto. It's not just about finance. It's about how we can utilize this to bring our life forward and to really explore the possibilities of a new future, because currently we can see as banks are failing the old future, or the old future, excuse me, the past clearly is not the way that we want to mimic. That's why blockchain and Bitcoin are such a powerful technology. They allow us opportunity to move into a more self-controlled, self-governed, and decentralized means of exploring the future. So my name is Kelly Kellum. Welcome to the BitLab Academy daily live stream every day, 10 a.m. Eastern Standard Time. If you are not yet following all the socials, you can see them right down here below. Boom, right there. You can see that little arrow. And I want to make sure that you all come over here to the my Twitter page, which is right here. We can see, boom, right here. Come over to @KellyKellum. You can see here. And make sure you come over to the BitLab Academy Twitter page, which is right here. Come and retweet this, because we're using these retweets. Those who retweet this, we pick some winners, some great things to give away. So come and help share in building this community. And without any further ado, I just want to say thank you all for being here. Thank you to the mods, Alex Green, Alexander G. We got Amello Fellow, Matt C, Brad Guidel, Crimson Caravan Company. So many wonderful people here in the community, in the chat. I'm not going to be able to go through all of them at this moment, because I want to jump into our esteemed and wonderful guests. But before we do that, make sure you hit that like button, you hit that subscribe button, and you ding that bell so you can be a part of our community. So without any further ado, we're going to jump right in to our esteemed and wonderful guest, Mr. Caleb Franzen, who is right here. How you doing, good sir? Let me make sure you are not muted. There we go. How you doing, Mr. Caleb?
Yo, I'm doing good, man. Quick question for you, though. I retweeted the post. Am I eligible for the get? No, I'm totally kidding.
You're eligible. You know what? And if you win, you know what? You're such a guy. If you win, I know you'd be the type of guy that probably gave it away to somebody else in the community. So absolutely.
Epic, man. Well, happy Friday. We're close to the end of the week, and unfortunately, things aren't getting much better. So, I'm excited to be here so we can talk about all the craziness that's happening in these markets.
So first, as I mentioned in the stream yesterday, we have Caleb Franzen here reporting to you live from somewhere across the globe. He is our traveling correspondent. You know what? I really appreciate you being here. Everybody loved when you were on here last time. And, you've got such a, for people that don't know Caleb, you can find him there at the @ symbol right there in the bottom left corner. Make sure you check out his page. He shares so much wonderful stuff. He's got an incredible Substack newsletter that he does as well. I'm sure he can provide you more information on that later on in the stream. But he has got basically 47 lifetimes worth of knowledge somehow of traditional markets, monetary policy, how this all integrates with Bitcoin and crypto. And as we've seen this week, Jerome Powell is, who's to say what he's doing is right or wrong, but what we can do as investors, as traders, is take our emotions out of it. We can never fully ignore them because we are human, but what data should we be looking at? What should we be what should we be really engaging with to figure out what's happening right now? So the first thing I wanted to throw your way, Caleb, is one, thank you for being here, and two, what's your reaction to the Fed policy announcement on Wednesday? And we can kind of start there, and then we can move our way into bank failures and what that means for Bitcoin, and we'll for anybody that doesn't care about monetary policy, I guarantee you're going to see why this is going to have a drastic impact as to what the future may be and how we can navigate it. So what are your thoughts on Wednesday, on Jerome Powell's speech and the decision?
So I actually thought it was, going into the event in its entirety, I was fairly confident that the Fed was going to move forward with a 25 basis point rate hike. I know as we kind of got further into the week, that really kind of became the consensus position. For me, though, basically the Friday morning that the SVB situation really got announced with the shutdown and the failure and being put into receivership at the FDIC, if we remember, like obviously that dominated the headlines, but that same morning we got the non-farm payroll data for the month of February. And that data for me, I did a somewhat facetious post on Twitter immediately after that was released, and I said, I hope you're ready for 50 basis points, because the labor market seems to still be extremely resilient and dynamic. And at that point, we hadn't yet received the February CPI data and the January data. The market perceived it to be stickier than expected. And so from my perspective, I was like, look, we're getting 50 basis points. Now, obviously, it's a moving situation. It's very dynamic because, the bank failure type situations, so on and so forth. Going into it, I was certainly not expecting the Fed to do a pause during that meeting. And so, we got 25 basis points. That essentially is what it is. But from my perspective, it didn't really matter what the Fed did in that meeting, right? If they cut 25 basis points, if they paused, if they hiked by 25 basis points, from my perspective, it was just a non-factor, because we have to remember monetary policy operates with a long and variable lag. That's a classic quote from Milton Friedman. And we're only 12 months into this tightening cycle, and we're seeing severe things starting to break and crack within the system. But almost all of the rate hikes that have been done haven't had their full effect on the system yet. So from my perspective, the Fed is the pitcher on the pitcher's mound. They've thrown the pitch, and now the ball is midair headed to the catcher's mitt. Regardless of if the pitcher blows in the midair to try to get the ball moving fast, it doesn't matter. The ball's moving forward, right? It's headed to its destination. And so regardless of whether the Fed cuts, pauses, or hikes, the ball's already traveling. It's already been thrown. It's got forward velocity. So from a monetary policy perspective, I didn't think that this meeting was too much of a factor. I know a lot of people are talking about a Fed overstep or a mistake here. I agree, it is a mistake, but we also have to look at, the monetary policy that's been embarked on over the course of the last 36 months, and especially over the last 12 months. And that was also, in many aspects, a mistake as well, right? So, it's been a consecutive string of mistakes from the Fed, right? So, another mistake, two wrongs don't make a right, But at the same time, we should expect them to be making mistakes. We should expect them to make oversteps and failures, right? And one thing that I love, there's someone who I really look up to in traditional markets is Hugh Hendry, who used to run Eclectica Asset Management. And, he has this great quote where he's like, can anyone tell me the last time the Fed got something right? And no one has an answer ever, right? When was the last time the Fed got something right? So why are we so confident that they're going to be able to get this right as well?
Well, to that point, I've got a question about this. Of course, all of us, I won't say all of us, but I would argue that the majority of people that are on this stream, at least, are very heavily interested in Bitcoin, crypto, blockchain, all the sort. But I've spoken to you about this before on various Twitter spaces as well here live on the BitLab stream. People are starting to gain a huge insight into why it's so important you can be laser focused on Bitcoin and that's fine. And you can be just a TA analyst and look at the charts, but we're seeing this last 3 years since the global economic shutdown in March 2020, that there is a direct and I won't even want to call it correlated. There's a direct impact on what's going on with the global economy, broader markets, and this understanding, this risk narrative that is heavily tied to Bitcoin. And as we've seen in the last 3 years, we've had more institutional and smart money, more legacy investor type people come into the Bitcoin space. So with the cascading sort of domino effect that we're seeing that is happening with bank failures, SVB, Silicon Valley Bank, First Republic, Credit Suisse, Silvergate, the list is starting to get deeper. We're seeing shares selling off on Deutsche Bank, and Capital One I see is up there on the list as well. I'm not saying that they are failing, but the shares are falling. As a Bitcoin investor, as a crypto enthusiast, adventurer, trader, whatever anybody may, wherever they may lie, what sort of advice would you give right now? What sort of data are you looking at as it relates to the Bitcoin and crypto investor? And the follow-up to that is, within that same context, are we starting to see any sort of narrative shift into Bitcoin truly being looked at as a alternative safe haven from those institutional investors? Or is this just a periodic sorry, a transitory, if I may use the word, so dirtily as Janet Yellen and our government has. Is this more a transitory, temporary effect because where we're at in the Bitcoin halving cycle? Is risk going to come back out of the markets due to all these factors?
Yeah, so two really important questions there. The first was kind of talking about how I'm essentially kind of approaching the market right now and what kind of advice I would give to people. I think first and foremost, it's really hard to, maybe be on the sidelines or stick to a dollar cost average schedule when we're seeing price go from 19,000 to 28,000 in a couple of days, right? That's a hard time to be sitting on your hands or say, oh, I'm only DCAing every week and I gotta wait now. This thing just got up to 28,000. But I think it's really important for investors to remember why they're here, right? And so everything is always going to depend on your time schedule. But if you're investing in Bitcoin over the next, 5, 10, 15 plus years, you should not be operating on FOMO and you should not be chasing the market higher. If anything, you should be letting the market come to you. And so, even for me, that's, it's one thing to say that and to try to, stick to that, but it's a whole other thing to actually adhere to that mindset, which is not to cave into the FOMO. And, thankfully, I've been in markets for a long time now, so I'm able to kind of control that emotion a little bit. But still, no one's perfect, right? But for me, I have not dollar cost averaged into this most recent rally, especially in light of the banking failures. And I think, Bitcoin is having its moment here because, it was essentially birthed out of the great financial crisis. And so if there is a moment for Bitcoin to shine, this is certainly it when people are, being very concerned about fiat corruption and what's actually happening at these banks and, what's the FDIC going to do? What's the Fed going to do? There's all this uncertainty about the fiat system. But one thing that we know for certain is Bitcoin's future money supply, right? And so I think investors are opting into that system, or I wouldn't say new investors are opting into that system, but I think for a lot of Bitcoiners, this is essentially reaffirming our belief in why Bitcoin is so important from a fundamental perspective. And so this kind of segues now into your second point, which is, is this really kind of like this regime change or inflection point in Bitcoin's price history, or is this going to be somewhat of just like a transitory pump? And so the analogy, not the analogy, but the comparison that I've been using for this has been, if we kind of rewind to, I don't even remember at what point it was in 2022, but I think it was definitely during the first or maybe even the second quarter of the year when there was the Canada truckers protest, right? And we started to see these protesters who were, expressing support, anti-vax type mentality, right? For right or for wrong, but they were getting shut out of their financial system out there in Canada, and their bank accounts were being frozen, and crowdfunding resources were being shut down because they weren't able to get support. And what did we see during that period is Bitcoin kind of diverged away from traditional markets and was rallying higher, while normal risk assets and equities, for example, weren't participating in that upside. But that rally didn't last for much longer, right? Because essentially for the first time, Bitcoiners were able to point to a first world country and say, look at, the fiat corruption that's happening here. Look at the traditional banking corruption that's happening here. We need an alternative monetary network. And hey, that's Bitcoin's time to shine. So again, I think, we're seeing some of those fundamental similarities between that situation last year and what we're seeing right now. And, we know how that story ended last year, which is that, that was somewhat of a temporary price support for the Bitcoin narrative, but it wasn't able to, overcome the macro dynamics that were at play. And so I think, we'll probably suffer a similar fate in the current situation.
I always love having you on, Caleb. Thank you for you're so articulate. You break down points methodically, which I appreciate in this space, because I think this could just be my own sort of situation, but I think a lot of people would agree that as crypto has evolved into the space that it has, and the adoption rate is soaring more exponentially each cycle, it is much like Shiba Inu and Doge could be a gateway entry into the crypto ecosystem. I think in a lot of ways, Bitcoin to the traditional finance sense is their sort of same that people that are closed-minded and unaware about the values and the power of the Bitcoin network and the power of blockchain look at people entering the finance market through crypto similarly to a Bitcoiner does a Shiba Inu person entering the crypto ecosystem. So with that being said, I think crypto has been an incredible gateway for a lot of people to find interest in financial markets and gain a lot of new knowledge, seek a lot of knowledge that would have otherwise been completely seemingly irrelevant to them. And so I think in a very different and interesting way, I think crypto has been, and blockchain has been, an amazing gateway for people to be interested because they can participate in a different way with the global markets. Now, with that being said, as we're seeing bank failures, we're talked about the potentiality. I've recently learned is a very American word, the possibilities of this pump being maybe temporarily fueled by where we're at technically in the market with Bitcoin and seeing these pumps come up while banks are also failing. What's on everybody's mind is will this rally continue? Are there things to be looking at? And what first comes to my mind, and maybe you can elaborate on this further, is the lack of clarity, one, about what a recession is. Two, have we already been in a recession? Three, signs are pointing to that a recession is coming. How will that impact capital flow into things like Bitcoin and then, further on down the list into altcoins? Where are we at on that? Are there signs showing that it's absolutely going to happen? And then I guess my last little tagline sort of thing to add to that is you mentioned earlier with Jerome Powell and the Fed, is it the right decision? Is it the wrong decision about what's going on? I think we all need to also be aware that the global economic shutdown of March of 2020 was the first, of at least the last 200 years, if not really of all time, global economic shutdown. So what roadmap should we be going by? And are these things going to self-resolve? And a recession how do we navigate what's going on right now when we're looking at a risky asset class like Bitcoin and crypto?
Yeah, and look, I don't have the answer to that, but I can tell you how I kind of approach it. And well, maybe I have my answer for it, but whether or not this is actually how things manifest is a completely different thing. When I put together my 2023 outlook, I argued that there's a very high possibility that we do fall into a recession in the United States this year. And there's a chance that we avoid it. But I certainly think that when we look at some of the fundamental economic data, we weren't in a recession last year, regardless of the fact that we had 2 consecutive quarters of negative real GDP growth. Because I think both of those quarters in the first half of the year could, really be described as anemic growth, right? I think one of the prints was like literally negative 0.6% on an annualized basis. So raise that to the power of 0.25, and that's the amount that GDP declined in the quarter. It's basically nothing. So again, I really do feel like those were anemic quarters. And so when I was looking at the market in December of 2022, when I was writing that 2023 outlook, there were a lot of different variables that I was looking at, but some of them, for example, were the PMIs. We could look at the conference board's leading economic indicators, all falling to recessionary levels, and these types of indicators literally don't miss. We can look at the curve inversions, particularly in the 10-year and 3-month treasury yields. This has literally forecasted every single recession since the 1960s. And that signal can occur between 6 and 18 or 20 months before the recession actually occurs. And so, with that signal basically inverting in August of 2022, you could do the math and figure out, okay, a 6 to 18 month window, hey, there's a pretty good chance that falls within 2023. In addition to that, right, like I think a lot of people look at something like the unemployment rate, which, got as low as 3.4% and then has just come back up to now 3.6%. And sure, it went up a little bit, but at the end of the day, that's a historically low unemployment rate, right? So that's very, very important to know. I'm trying to remember now off the top of my head. I think 3.4% was the lowest since 1969 or 1970, something like that, right? So, I mean, this is, extremely abnormal resilience that we're seeing in the unemployment rate. And look, the labor market isn't perfect, right? But there are a lot of aspects about the labor market that are very strong, right? And so the point that I've been making is that, we might not agree that the labor market is strong, but I think unequivocally we can say that the labor market has been resilient and dynamic. And those two words in particular, I think, are the right way to describe what we're seeing in the labor market. The issue that I have, right, is that the Fed wants that unemployment rate to go up a little bit higher, or at the very least they're expecting it to, right? So in their latest summary of economic projections that we got on Wednesday, I think they were forecasting 4.5% or maybe even 4.4% in the unemployment rate. Well, right now we're at 3.6, right? If we look at the 12-month moving average of that unemployment rate, I'm borrowing this from someone named Jeffrey Gunlock of Double Line Capital. He's talked about how when the unemployment rate gets above its 12-month moving average, that always leads to a period of economic weakness, right? Maybe not necessarily an outright recession, but certainly a deterioration in economic activity. And so if we look right now, that 12-month moving average is like 3.8%, maybe at most, right? And so we're right now sitting at 3.6. If we just accelerate a little bit higher, the Fed is saying we'll likely get to 4.5% this year. That's not a good sign, right? And so we're already seeing a pretty solid little acceleration here on a year-over-year basis. And so I still kind of reiterate my stance that a recession this year is likely. And I know that that was a very consensus perspective to have going into the year, and markets hardly ever unfold in the consensus expectation. But I try to, as much as possible, be data driven. And when I look at the data, it's very hard to say we're going to avoid a recession this year. So again, that's been my base case.
I have my mic muted there. My apologies to everybody listening. Fixed mic. So what I was saying was, because you are a technical artist in terms of you've got great charts that you do within both the traditional finance sense as well as the Bitcoin and crypto. Show us some of the things that you're looking at and what's going on within the market, and anything that might be signaling where traditional markets might be headed. If there's any separation, is there any new liquidity? Here's one of the points I'm getting at is, we in the Western world are looking directly at the M2 money supply in the US and considering, the 300 billion that was just injected. Is it quantitative easing? Is it not? Is it a loan program, et cetera? But we're also sort of failing to broadly, more regularly consider what's going on with the new liquidity that's coming in from China, from Japan, from other parts of the world. The change in how economic trade is happening between Russia and China, using the Chinese yuan, the devalue. I mean, there's 100 different points that we could take here. So I'll throw it over to you and some of the charts you're looking at and how it's helping you shape your outlook on where Bitcoin might be going. Is Bitcoin taking over as banks fail? Is there a broader look we should be looking at? What charts are you seeing?
Yeah, so I would love to dive into the charts. Before we do, let me just preface this by saying, I think when I look at the charts on a variety of different time frames, I'm seeing very, very bullish indications, right? And so that's a great sign, right? Of course, look, I'm a Bitcoin optimist and I'm super bullish on the asset long term. And then especially when I see long-term, medium-term, and short-term indicators flashing bullish statistical and on-chain data, of course that's going to perk me up a little bit. But I think it's always important for people to understand statistics and on-chain data, all these indicators, we don't operate in a vacuum absent of economic data, of contagion events, so on and so forth, right? So at any moment, these signals could be invalidated and become bearish or less bullish, whatever the case is, right? Or maybe even more bullish, right? We'll see. But I just want to preface with that first and foremost. And so let me go ahead and share my browser here. Are you able to see this, Kelly?
Yes, sir. Yeah, look.
Okay.
Yeah, it's bright and clear. I'm going to mute the BitLab logo so it doesn't cover your screen. There we go.
Okay. So what we're looking at here is just Bitcoin, looking at daily candles. And what we've done here, we're looking at the Coinbase exchange data. And so one particular indicator that I love to use is the anchored volume weighted average price. And this is basically calculating kind of like a moving average, but we can pivot that moving average to a specific level or to a specific date, and then we can calculate where that moving average is weighted based on how much volume is transacted at each given price. And so this is super, super important. And so what I've done here is we're tagging that AVWAP to the November 2021 highs, and we can see that that level acted almost perfectly as resistance during that March 2022 rally, and now we've come right back into it. And when price was back here around 20 or 21,000, I did a post saying that we should expect this to even be a price target to the upside, which at the time was around 28, 29,000. And so sure enough, it's been choppy as hell, right? But we've gotten there now. We've hit that AVWAP. And if we zoom in on it a little bit, we can see we haven't really even been able to have a daily close kind of above that range, right? You could argue maybe yesterday we did, but just barely, right? And especially in light of kind of today's weaker price action, it's hard to, we're still waiting for confirmation to get above it, right? So we've had 1, 2, 3, 4, 5 days. This is now the 6th day essentially of Wix getting above that AVWAP, but not actually being able to hold above it. And so this is very, very important because this is kind of a line in the sand, right? Back in March of last year, I was saying, hey, look, this is a bullish little breakout here, so long as we could stay above it. That's the critical point to realize, so long as we stay above it. What happened is we fell back below it at 46.3 thousand, and we had a massive bleed all the way back down to 17K. So, clearly that was not a fun ride, but this gives investors a very great and easy kind of line in the sand to manage risk against. And so far right now, I don't think we've had a decisive breakout, but we also haven't had a decisive rejection either, right? Price has simply taken a pause and a breather at this level, basically after going up 68, 70% year to date, right? This has been a massive rally. Of course, the market is going to need to digest those gains. So I think first and foremost, that's one that I'd like to share. And Kelly, if you had any questions about it or any additional color on it, I'd love to hear it.
No, I mean, I think this is one of those metrics I think a lot of people, or tools, I should say, a lot of people forget to look at. We get blinded by RSI, stochastics, or even simple moving averages. And I think the AVWAP is an incredible tool, especially when looking at just a broad definition of ignoring all the other data and seeing, are we undervalued in terms of where the market is? Are we in a downtrend or in an uptrend? If we are selling, if investors, if we're seeing the market sell off as the price comes into the AVWAP, that is signifying that that price level at the AVWAP is an exit point, because people are expecting further downside on the institutional level, because anchored VWAPs tend to, show institutional traders in bear markets selling it as resistance, and then basically buying dips from that and trading up into the AVWAP. And once we get above that AVWAP and hold above it, we can see people using it as support, institutions buying that level of support and letting the price get overvalued to sell short. So no, I think it's great. I think it's great that you're highlighting that, because a lot of people forget. I mean, there's so many tools out there, and I want to point this out to everybody watching now, regardless of your level, beginner, intermediate, pro, however you want to distinguish it, whether it's 1 year, 5 years, 10 years, there's so many tools available to everybody out there that you need to figure out what, tool by tool, data point by data point, mastering those and see which ones really fit into your strategy. Not just using one because you heard it on the stream or you heard it somewhere else, but really understand it so that you can use it as a tool in your belt versus something that hinders you because you use it incorrectly. But just continue on. You're sharing magic here.
Well, I want to highlight why the AVWAP is so important, right? Because if you pivot it to a high, there's a good likelihood that it acts as resistance. And if you pivot it to a low, there's a good likelihood it acts as support. And so we could see, right, if we pivot from the 2015 lows, right, that was almost perfectly support in the 2018 lows, again during the 2020 lows. And look, we've come right back into it again here as well, right? So clearly there's a lot of price memory that's being reflected here in this AVWAP. And then, you could even tag it from the 2018 lows, and you could see we tried to rally there in 2019, and then the COVID crash happened. So maybe that was somewhat of an exogenous event. And we've kind of come back into it here, right? It was at 23,000. during this most recent bear market. And if you were DCAing at 23,000 and started to DCA there, hey, that was a great invitation to start buying Bitcoin at a strong discount, right? So we can see here, it's not always going to act as perfect support, but it gives us a very good line in the sand that we should be aware of, both on a short and long-term basis, right? So I think that's first and foremost. What I want to do really quick, let's go ahead and get rid of those EV-WAPs. I want to go back to the daily candles. And the one thing that I want to highlight, just because you kind of brought it up there yourself, Kelly, and it's something I've been sharing as well on Twitter, is if we look at, let me grab this, the RSI, right? And so what we're seeing here is just kind of a classic bearish divergence here, where RSI is making lower highs, but price is making higher highs. And so I wouldn't necessarily say this is a concern, right? Because, first of all, RSI divergences aren't really a part of my overall primary methodology in my analysis, but at the same time, a lot of people find a lot of valid takeaways using this indicator. And right now, right, we have to acknowledge at the very least that we're getting a bearish RSI divergence. It doesn't mean we're actually going to get the full follow through, right? But at the same token, I was highlighting as well in November and December of this year that we were getting a bullish RSI divergence in the fourth quarter, right? Where RSI was making higher lows, but price was making lower lows. And that's, classic bullish divergence. And it worked perfectly, right? I mean, we've gone on this massive run here since that divergence. And so we kind of have to respect it at the same time, or at the very least, like I said, be aware of it. And so for me on daily candles, these are kind of the two main things that I'm really focused on in terms of kind of like the short-term price structures for statistical data. But then my favorite, of course, and Kelly, I got to give a massive shout out to you for this, because you put this indicator on my radar, is the short-term holder realized price. And so when we broke above the short-term holder realized price in January, funny enough, I did my first and only TikTok about it, because I was like, hey, this is a great way for me to have my coming out party on TikTok. But look, this is a classic bullish indicator. Every single bull market can be characterized as price being above the short-term holder realized price. And so when we got above it there, it doesn't mean that the bear market is confirmed to be over, but it certainly tilts in favor of the bulls. And so we've seen bullish dynamics occur since then, right? That was when price was around 18, 19,000. And so we're sitting here today at 28.1K. Clearly this has been an effective kind of line in the sand. So on a short-term basis, so long as we remain above the short-term holder realized price, I think that there's some reason to be bullish here. And then if we zoom out even further, we're also above the long-term holder realized price, And so again, this is another key variable where if we look through Bitcoin's price data, getting below that long-term holder realized price has been a beautiful accumulation period for investors. And as soon as we get out of that zone and leave it permanently, that's a new bull market. And so we're basically seeing, that same kind of dynamic today, right? We left that zone at 20,000 and we've been above it ever since. So these two main on-chain data points that I really look at, I'm not an on-chain guru like you guys, Kelly. So, I leave that to the pros. And so it's easy for me to just pull up the long-term holder and short-term holder realized price and say, hey, where are we right now? Are bulls in favor or are bears in favor based on these two data points? And right now, bulls are in favor. So that's a great sign.
No, I mean, yeah, I completely agree. And, I really try to make every effort to let people know, because I think people have a sort of mixed reaction to what on-chain data is. And the reason why I love it so much is not to use it as any sort of day trading signal whatsoever, but it's to grasp a macro picture as to what important various and segmented and identifiable behaviors are of different types of investor within the market, whether it be strong hands, aka long-term holders, or weak hands, aka short-term holders. Even if somebody's been a trader for 20 years, if they are trading, they might be a strong-handed minded type of person, but the coins that they're traded are technically in weak hands because they are trading volatility to the downside. They're trading volatility to the upside. So it doesn't matter the level of experience somebody has. The more an asset has short-term minded holders buying at those levels and not long-term holder buying at those levels, the weaker that price level is. So, and so that's why I'm such a big fan of on-chain data. Even with all the new updates we're doing for BitLab Academy, there's a whole on-chain data course on that and I really recommend it to people, even if they're not interested in it. Even somebody that's not interested in trading, I beg you, I implore you, I encourage you to look into understanding on-chain data better, because what you will see is you'll gain knowledge as to where smart money is buying, where they're selling, and you'll see that they are selling to hype cycle buyers, retail, small-minded, or I don't want to say small-minded, that's somewhat mean, but not well-informed people about market dynamics. And I want to mimic people that are buying those lows and selling, taking profits at those highs. So that being said, I do know that we've discussed previously, looking at traditional markets, looking at the signal, for instance, like the VIX. What is the VIX doing right now? Is that giving us any sort of indication as to where risk is in the general market? And is that sort of correlation changed or shifted at all right now with this sort of, at least for the time being, temporary flood of capital into Bitcoin in response to these banking crises?
So I'm so happy you always ask me about the VIX, because this is one of my favorite charts to share. This is a strategy I've been sharing since August of last year, and it's not something I created. I heard it from somebody else, but it's been super effective. And so I've been trying to share it and get as much attention on it as possible. And so what we're looking at here is the CBOE Market Volatility Index, and this essentially measures market participants' expectations for volatility. I think it's over the next 60 days. And so there's a lot of math that gets involved about how this number is calculated and so on and so forth. We don't need to get into that. All we need to know is that typically when risk assets are falling, the VIX is rising. And when the VIX is falling, risk assets are probably rising, right? All else being equal, And so the strategy here is that investors should start to buy risk assets when the VIX is high and sell when the VIX is low. And so this other person shared that those kinds of line in the sand for 2022 was when the VIX was above 30 and when the VIX was below 20. And you could even see briefly earlier this week, right? What was this? This was on Wednesday. The VIX moderately got below 20, and that was a perfect invitation maybe to start to sell some risk assets. It doesn't mean sell everything or go 100% into cash, but maybe it just at the very least means to be a little bit defensive, right? Because when the VIX gets this low, it's essentially indicative of complacency, right? And so a lot of people like to look at something like the fear and greed index. One of the primary components of the fear and greed index is the VIX, right? So, if you don't have the ability to pull up the VIX, just look at the fear and greed index. They're basically the same exact thing, because the VIX is a massive component for how the fear and greed index is actually calculated. And so right now we're kind of in this, chill zone right now, right? And nothing is saying that, we won't immediately go back below 20 here over the next week, 2 weeks, 3 weeks. But by that same token, right, nothing is saying that we're going to go back to 30. And so we're kind of in that chill zone right now. And I'll be very clear about this. I've been short the market, and for the past month, that's been very, very difficult. But I did reload on some of those positions yesterday. And based on what the VIX is telling us, we had a nice little explosion follow through yesterday as well. So that's one thing I'm super focused on. I want to go back to Bitcoin one quick second though, Kelly. I got to stop sharing my screen here so I can pull up my other window, and then I'll go ahead and grab that.
Well, while you're doing that, I just want to shout out everybody that's in chat. Thank you so much for being here. Thank you for being a part of this growing BitLab Academy community. I really, really, truly appreciate you all. If you have not yet, make sure you come over to the BitLab Academy. If you're watching over at the Hit Network, or if you just see this clip anywhere else, make sure that you come over here to the BitLab Academy page, which is youtube.com/@BitLab Academy. And make sure that you are following Caleb Franzen as well, which you'll see his @ symbol below his face when he comes back up. And if you haven't yet, hit that like button, subscribe, ding that bell, join our community. Let's get these likes. Right now, we've got about 204 people watching and only 91 likes. We're here at your service. So just do us a favor, hit that like button. It helps let YouTube know that you are interested in crypto content, and it helps the whole crypto ecosystem grow. So I'm going to throw it back over to Caleb now. That's where you can find him. You can see his @ symbol. If you haven't followed his page yet, what are you doing? Do that. Give that follow.
Thanks, Kelly.
Okay,
so okay, awesome. So what we're looking at here is total crypto market cap. And this is a chart I started sharing last week because we're essentially at a very pivotal level. And, I kind of preface my TA and on-chain comments with the fact that, we're seeing an overwhelming amount of bullish data. But let's just kind of take the opposite side of the coin here, and we have to acknowledge, the potential overhead resistance that we're currently trading within. And so what is this level that we're looking at? You could see why it's so significant. There's been a lot of price memory through here, right? And so if we kind of zoom in on this data a little bit more, right, like we could see very clearly why this is so significant, right? So let's see here. This was resistance in January of 2021. We flipped it into support 3 times during those mid 2021 lows, starting in May, June, and even July. Perfect rebounds on those levels, right? Then obviously I'm doing this a bit with hindsight, but that's super important because hindsight tells us what levels were critical. Price can only do three things. It can go up, down, or sideways. And so understanding how price reacts to key levels, up, down, or sideways, is very indicative of what might happen next, right? So we could see here, based on this data, support again briefly in mid 2022, perfectly as resistance once, twice, 3 times. And now, so far this year, it's been acting as resistance as well. And so where are we right now? We're right in this zone. And where are we facing resistance for the past, 5 days? We're just basically moving sideways. It's been right here in this range. And so once again, we don't have a clear indication of a breakout or resistance yet. We've just been moving sideways through here, right? But we could see earlier this year in February, 2 times, basically multiple times, if you're looking at it on daily candles, we got rejected on here and we had some pullbacks. And so I know a lot of people have been really kind of focused on, like you could argue we're in this like broadening wedge, or some people call it like a megaphone type pattern, right? And so I wouldn't necessarily say we're going to have a deeper pullback all the way to the bottom of that megaphone. But, if we do, that's another 27% downside for total crypto market cap, which, thankfully wouldn't produce new lows, right? And so, at the end of the day, bull market structure could still be intact because we wouldn't necessarily be making a lower low relative to these key levels back down here. But it's definitely something that we should kind of have on our radar here because this is embodying the entire crypto market, right? This is literally everything in crypto, including stable coins. And so we're here in this key zone, right? There's been so much key price action that's occurred perfectly within this teal range that, everyone should have this on their radar, even if they're not invested in Bitcoin and they're just, messing around with alts. Or even if you're only focused on Bitcoin and you don't care about altcoins, this should 100% be on your radar because it's indicative of the entire market strength, right? It's like we're looking at the S&P 500 here. We're not just focused on tech stocks or real estate stocks. We're looking at everything being embodied here, right? So my view is that this is essentially the S&P 500 for crypto, right? So we have to be looking here at total crypto market cap.
So on that note, just I like to regularly remember or try to remember that as much as I feel like we're breaking things down for the novice, the beginner, when we're looking at something like that, whether it's a total market cap for all of crypto or Bitcoin or any individual asset, when you're looking at previous price action history and we're seeing a major level over a long period of time of a lot of pullbacks and bounces, providing that macro sort of support level. And we see right now, and you pointed it out, or at least the chart alluded to it earlier, we have price action coming up into that level right now with Bitcoin, previous macro support. So we can identify that at least at minimum that there's a likelihood that there is going to be some macro resistance coming into that level. Why is that? How come previous bounces, where price bounced up from, how come price coming into that now? How come we can forecast that as potential areas for people to either take profits or get out of the market? Why? And we're seeing that with the RSI divergence coming into these levels.
Sure. Yeah. So, this is just kind of like an advertisement, if you will, for technical analysis, right? Because what is price at the end of the day? It's it's the equilibrium of supply and demand, right? And so we know what Bitcoin supply is. We know what crypto supply is, and obviously more supply can come into the market, so on and so forth, based on people wanting to sell. But at the end of the day, price is just a representation of market psychology, right? And so it's very important to know, where do investors have price memory? What are the key levels? And so I can't provide a justification for, why it's going to rally there every time or why it's going to act as resistance every time. But nonetheless, we can identify that range and say, hey, look, it's not a perfect level, but there's a range here where investors seemingly have a lot of price memory, right? Because it kind of goes back to that on-chain data discussion that you were just sharing with us, a few minutes ago, which is that, it's very important to know how cohorts of investors, what their psychology is, where is their cost basis? Because if you know their cost basis and then you know how much underwater they are, right? Maybe their cost basis, now they're down 40% from that cost basis. They've been, beating themselves up for 4 months because they're down 40% relative to that cost basis. And all of a sudden they have an option to get out at that cost basis. You're probably going to face some selling pressure there from those investors who have said, oh my God, thank God, I just had to sit through a 40% drawdown. I want to get off the roller coaster. I'm selling now, right? And so that's key investor psychology that we can understand both through price action and on-chain data. And again, it doesn't mean it's going to work every single time, but it's a great input to have amidst a broader array of market dynamics, right? And so this is why both TA and on-chain are so important, because at the end of the day, market psychology runs a lot of the entire market dynamic, right? At least at a lot of key levels. So it's super important to know.
That was a great breakdown there. As this stream is titled, banks fail, Bitcoin taking over, ? What's next for crypto? So as I scroll through the news every morning before I even sit down at my desk, I do about an hour's worth of, I don't want to call it work, but preparatory investigation, scrolling through news headlines, seeing what's popping out. We're seeing over the course of this last 2 weeks, Credit Suisse, which a week before they basically collapsed, they got a basically clean bill of health. So I had this long post on Twitter about this argument for regulation coming into the crypto space, whereas in reality, Bitcoin, if we speak about it more specifically, my argument is not that we don't need regulation, is that we very clearly need regulation, but we need it in an entirely different way than traditional finance needs it. Bitcoin has on-chain data that you can see where funds are, how long they've been held, who's holding it, or at least what wallet addresses are holding it. Now, of course, with centralized exchanges, I think, of course, there needs to be a lot different and focused sort of regulation that gives them a playbook about what they, cans and cannot do's. But where we're at today, we're seeing, like I said, Deutsche Bank was, they're a major sort of player in the global finance space, Capital One as well. And, the list goes on. Are you seeing any data or any charts or anything that's indicating that kind of who's up next on the chopping block and what potentially that could mean for markets? And that's a big question there, so I apologize for that.
It is, man. You're putting me on the spot today. I love it. Yeah, I mean, we could see a couple of different things, and I think I'll pull up some of those charts here in a second. I'd love to take a quick opportunity really quickly just to highlight this theory of mine that I've been sharing since November that I've been calling the earthquake effect. And what I tried to do with that analogy was try to highlight what is essentially happening in our financial and economic system. And so the analogy was kind of based, I grew up in Southern California in Santa Barbara, and so we used to get some pretty sizable earthquakes there. And so in coastal geographies, when you get an earthquake, what happens is those tectonic plates shift and the water in the ocean starts to recede, right? And in certain environments, certain ecosystems, what can happen after that water recedes is it comes rushing back. So you get this kind of tsunami after an earthquake, right? Which can actually be super deadly if you look at some of the things that have occurred in India and Southeast Asia in particular. And so let's tie that into what's essentially happening in the markets. From my perspective, inflation was the massive earthquake. The Fed's massive tightening cycle that we've essentially undergone for the past 12 months is the shift in the tectonic plates. And what's happened since then is all the water of the ocean has been receding. And what's happened is we've been exposing all of these naked swimmers. And this really kind of highlights, right? We don't know who's swimming naked until that water goes away, right? And so, that's the big thing, right? No one was talking about Silicon Valley Bank 6 months ago that they were going to be going under. No one was talking about Signature Bank 3 months ago that they were going to be going under. Yet we just had the second and third largest bank failures in U.S. history this year already. And so this is the big thing, right? Is these naked swimmers can come from anywhere, And some of them can be interrelated, so somewhat of a domino effect where it literally knocks over a bigger and bigger player as it keeps going on. But sometimes it could be completely unrelated, right? So this is why I really like the earthquake effect analogy more than just kind of the simple domino effect kind of comparison. And so the big thing I think people should be on alert for now is that tsunami that still hasn't yet come, right? Because so far, all of the market failures, whether they were in crypto or now in the traditional markets, they either weren't significant enough to cause broad calamity to the overall economy and financial system, or we've actually gotten intervention where the Fed, the FDIC, and the Treasury have been able to step in and essentially block that tsunami from really getting formed, right? So far, we haven't seen that tsunami come in. One thing that I know for sure, we will see more naked swimmers getting exposed. We just don't know who. And so we could be on alert for clues about who those people might be, but we never know, right? And so I just want to preface with that really quick. And so I did a quick little post earlier this morning because now, the market cycle news is essentially being dominated now by Deutsche Bank and European banking failures, right? And so really quick, let me just share this.
The other thing I think you can tie into this as well is there's so many, not just Credit Suisse, but like every bank out there. There's I think the number I saw, don't quote me on this, was something like $1,500 trillion worth of basically paper derivatives that are basically liabilities that are being held by a lot of these banking institutions that as for instance Credit Suisse falls, what happens to those? Who bears the brunt of the loss of that capital? Because this is, these are on paper and in some ways do tie directly to valuations of other assets and this is where you're saying that earthquake effect is going to not maybe be immediately noticeable in what we're seeing, but this is going to have lasting impacts on a broad variety of institutions and financial marketplaces. I mean, the earthquake effect is yet to be seen, I think, probably for the next 7 years as these things play out. So.
Yeah, I would agree with that, Kelly. And so, so far we've had 4 major banks essentially go under or had to be intervened or bailed out, whatever verbiage you want to use. But so far, right, we haven't seen First Republic officially go under. Capital One hasn't necessarily gone under. Pacific Western, PacWest, there have been concerns there, but nothing's gone under. Deutsche Bank today, it's it's just dominating the headlines. UBS even now, I've been calling it risk osmosis. All the risk associated with Credit Suisse now has essentially been absorbed into UBS, the same way that the risks associated with BlockFi were absorbed by FTX, right? And I'm not saying that BlockFi's failure and buyout by FTX led to FTX's collapse, right? But clearly that risk did not get transferred, right? It just simply gets absorbed. And so someone was asking me in here, why Capital One? And so I showed these 2 charts. Joe Consortia, in my opinion, he's a must follow on Twitter. Great mind in the Bitcoin space, combining a lot of macro stuff. And so what we're seeing here is 5-year credit default swaps for Capital One skyrocketing in recent weeks, right? This hasn't even been a year-to-date thing. This has literally just been since the beginning of March, right? So literally the last 3 weeks, credit default swaps, basically the cost to insure against default for credit or for Capital One is skyrocketing. This is very, very significant. And then we could zoom out even further, right? This is only just going back since 2020. There was another post here from Wall Street Silver looking at it going back a little bit further to 2018. You could see, again, this is just ballooning, right? And we've actually already taken out those highs from 2020. So, clearly this is a moving dynamic here. But again, no one was talking about Capital One going under a month ago, even, 2 years ago, right? So another potential naked swimmer here that could go under. I think the important thing for people to remember, and I think I did a post about this yesterday or I saved it as a draft, but no bank in the history of banks could ever survive a bank run. It's simply not in the business model for any bank to survive a bank run. I worked in banking, so I know how these things work internally. Banks take your deposits and they lend it out, right? And that's not some insider secret, right? Everyone knows this pretty much. And for the people who don't, hopefully it's somewhat of an eye-opening experience. It's like if you go and park your car at a parking garage, and what that parking garage does is they start like Ubering your car, right? Or they start renting out your car, and then you go up and you just went out and had a nice date with your wife or your girlfriend or your boyfriend, whoever. You come back to get your car and they're like, oh, we don't have it right now. And you're like, wait, what? Where's my car? And they're like, oh yeah, sorry, we had someone come in, we rented it out as an Uber. It's like, wait, what? I thought you guys had my car, right? And so that's literally the model, the business model for these banks. And so no bank can survive a bank run, and no bank will ever be able to survive a bank run. They will need bailouts. They will need intervention coming in. I'm not saying any of these banks are necessarily going to go under from a bank run, but it's just an important context to have here, right? And so we don't know who that next victim is going to be. But again, the earthquake effect, the thesis that I have is that we will see more naked swimmers getting exposed.
So with that being said, it's I did a Twitter post earlier today. Let me see if I can find it. You're not going to be able to see this, Caleb, but the community is. By the way, if you haven't yet, come over here to the Academy BitLab website or Twitter page. Retweet this tweet because on Monday we will be doing a giveaway, and the winner is going to be picked through who retweeted this tweet, and it's about today's stream that we're doing, and you can do this during this live stream, or if you're watching this later on, or at any other point. It's anybody that's retweeted between now and Monday. The winner will be drawn Monday. But the tweet that I did, let me come back over to my page. Essentially, I said, want insurance from bank defaults? Well, then I put Bitcoin. It's not insurance, but it's a more durable and transparent network solution that removes any counterparty risk and prevents anyone else from speculating with your deposits, because banks risk your money to make money and don't have it available to you, whereas Bitcoin is yours. Obviously, the caveat with that is the fact that in order for that to be the case, you also need to make sure that we're taking responsibility for the assets and the capital that we own. And if you own, let's say 1 Bitcoin, a quarter Bitcoin, 0.1 Bitcoin, or 1,000 Bitcoin, and you're storing it on Kraken, on Coinbase, on wherever, you're still in the same position of having your money being held on any bank. You need to, of course, use any of these centralized institutions if you're going to for the services they provide, whether it be trading, whether it be any aspect of the services provided. But in order to actually be responsible for your assets and remove them from that sort of centralized, they take the risk, make money off you, then we need to take more responsibility in how we hold and store our crypto. So with that being said, I kind of want to pivot back to what you mentioned earlier about all these the model in which banks operate, and thinking about everything going on right now. I think it's everybody's kind of in a conundrum about where to put money. Is this coordinated? Just coming from your own sort of opinion, and of course, we're not going to hold your feet to the fire on this, but seeing banks having the issue that they're having, and seeing the talking points that I almost said Caleb Franzen, Jerome Powell had in his press conference, it seemed like he was trying to really prevent. Hold up, tout the, it's important, it's safe to have your money in banks. But we're also at the same time seeing the same day, hours later, SEC, coming with the Wells notice towards Coinbase, this hit piece on FUD on Jack Dorsey regarding the Cash App and Block, I think is the name of the company. And we're also seeing in the same time period over the last 2 to 3 weeks, on-ramps and off-ramps getting challenged or shut down for Bitcoin and the broader crypto ecosystem. Is this all coincidentally chance this is happening in a similar time frame? Or is there a coordinated effort potentially that banks are trying to let some banks fail so they can more centralize where banking's being controlled, while also preventing, with these on and off ramps, people exiting that traditional finance sort of economy and going into the decentralized world of Bitcoin and crypto? You have 4 hours to answer this question.
Should be enough time. No, I'm kidding. Yeah, I mean, super, super loaded question there. I think, one thing that is just super important to remember is the FDIC protects you up to $250,000 per deposit at a bank, right? And so, I saw this kind of funny tweet about Giannis Antetokounmpo for, my fellow NBA and basketball fans out there. He's, probably the best player in the NBA this season. He makes probably $40+ million a year. And I guess this guy has like dozens and dozens of bank accounts where he has $250,000 in each account, right? Because he wants to make sure, hey, if shit hits the fan, I need to be FDIC insured, right? So for each of those bank accounts that he has, he's theoretically insured up to $250,000. And so if he has no more than 250,000 in there, he's essentially fully insured, right? And so for people out there who are maybe listening, it might be good if you have 300,000 plus in your account to go ahead and transfer out 50,000 or more into a different bank and start up a new banking relationship. And that might just be a good idea anyways, even if you had less than 250K, simply because you might want to start building up a credit relationship with that bank, whatever the case is. Start building a level of trust and KYC with that bank, right? Because in order to have that relationship and to lend from a bank, they want to know who you are and they want to know that you're good for the money, essentially, right? So I think that's important to note. I think unfortunately and fortunately, it's kind of a double-edged sword, is right. We live in this technological age, and so even for me, right, I'm out in Croatia right now, kind of doing my digital nomad thing. And, it's kind of a pain in the ass to go to the ATM, and Chase charges me $5. The foreign bank out here charges me $4. I have to use an FX rate that's a little bit different than the market rate. So it's more expensive and it's not as efficient for me. Whereas if I just go and I just use Apple Pay or use my debit card here, I can avoid some of those fees and maybe even get a better FX rate, right? And so I need that debit card. And so I need a banking relationship in order to use that debit card. So it's hard to just tell people, get out of the traditional banking system, right? Because we need it in order to participate in daily life based on where we are right now with the current, Bitcoin and crypto adoption cycle. Unfortunately, we're just not quite there yet where it's a, viable, complete alternative in its current form. Could it be in 5-10 years? Yeah, I believe it will, right? That's why I'm here in the Bitcoin ecosystem in particular. And so, that if that's your thesis, right, unfortunately, we just need a little bit more time. And so it all comes down to how do you mitigate any of the risks that you're currently faced with, and how can you go about approaching that in a way that works for you, right? So that's what's important.
Sorry, I was producing while also being a part of the show. No, I mean, I completely agree with you there. Do you think, obviously, blockchain, Bitcoin, crypto exchanges, let's speak more specifically on exchanges. We have,
Sure.
Coinbase, BitGet, Bybit. I mean, the number of exchanges out there is astounding. The number of, let's just say the reputable top group of them, Coinbase, Binance, BitGet, Bybit, Femex, KuCoin. Do you think, obviously these are very, very different. I mean, they couldn't be more different in some ways to what we think of as a traditional bank, but do you think that there is a need or a push in some respects for these institutions to have regulations come in that have them set up some sort of new digital banking charter, and along with that have some sort of similar digital asset protection? I know, for instance, myself, here's a great example. And by the way, I'm not sponsored by Coinbase, but I just want to point this out to people. I had over $30,000 stolen from my Coinbase account about a month and a half ago. And it just turns out that a member of one of my colleagues at the HIT network had put me on to Coinbase One, which is an additional $30 a month or something like that. And with that, it allows you some different things, also access to support and among other things, but it also protects your account up to $1 million if there's unauthorized, unlawful access to your account and there's money taken out. So with that, I was able to get the entire amount returned to my account, and it was returned not in US dollars or USDC or stablecoin, but they returned it in Bitcoin. But I don't see that broadly focused on a lot of exchanges out there. And of course, we do need to take a deeper responsibility for our assets. But one of the sticking points with traditional banking, and this is also why traditional banking has the fees they do, and this is also why they risk your assets to make money on the back of you so that they can reduce the fees that they could charge you, but is that banks are required to have certain sort of rules and protections and FDIC insurance, and reputable banks at least. Do you think that centralized entities within the crypto ecosystem there's going to be a digital charter that's going to be moving towards, or is that something that we should stay away from entirely and just continue growing our sort of awareness and ability to manage our own capital?
Yeah, so I think, and look, I'm no regulatory expert, right? But I think regulation is certainly incoming, right? And so we've seen a lot of hiccups, especially over the last 12 months in the overall crypto ecosystem with these failures and, even seeing like influencers and different, online people, being pursued for, legal repercussions because of promoting certain things or whatever the case is. But if we just focus specifically on these exchanges in and of themselves, Coinbase 2 days ago got issued a Wells notice, right? And so I think that was for, essentially like their earn program or something like this. I don't even know if like Gemini earn depositors have gotten any of their money back. Like it's like totally gone out of the news cycle. I don't know if you know anything about that, Kelly, but as far as I know, nothing's been resolved. And so it's like, I think in a lot of ways, these centralized exchanges are operating as a bank if they're offering a yield product. Because how do they offer you that yield? They go out and they make their own risky investment or loan, right? And whoever's on the other side of that loan is providing an interest rate back to Gemini, which they can then offer back to the users who are providing that capital for them to lend in the first place. And so in a lot of ways, it kind of is acting as somewhat of a bank. And so I'd be super surprised. And look, I mean, in a lot of ways, these crypto exchanges, have a lot of the kind of regulatory requirements that are required of traditional, brokerage platforms like Schwab or Fidelity or E-Trade, and even like banks, right? Like they all have KYC. I need to provide my social security number, my address, a photo of my driver's license. Also, it can be in compliance with the regulatory framework that's currently in place. And so I would definitely, there's already a lot of regulation in the space, but I certainly expect that we will get more regulation, which will be a double-edged sword. In a lot of ways, that'll be good. It'll protect consumers, hopefully to some extent, but the devil's in the details on these things, right? And so people are always asking for regulation until it goes against fundamentally what they want. What type of regulation, right? And so we always know government is going to overreach the extent of their involvement. And so if we're here asking for regulation because, we got screwed over last year, or, we were involved in Celsius and, we didn't understand the risks and so on and so forth, and we want protection from that, well, how does that protection start to inhibit us as operating within the crypto ecosystem, right? And so that's going to be the big thing to kind of keep in mind. I even saw some like headlines now that banks now are basically putting up guide rails to transfer money onto crypto exchanges and basically blocking that wire transfer or ACH, because the banks now are essentially stepping in and saying, okay, well, we'll protect consumers, right? And so the banks don't want the deposits to leave the banks and go to crypto. Of course not, right? The banks don't want the deposits to leave anyways, because they want to lend that money out. And so if they're blocking it from crypto, the market's already kind of self-regulating in a way, just from the competitive aspects of capitalism.
Yeah, and you're not going to be able to see this, Caleb, but for everybody watching out there, this is a tweet that I retweeted yesterday or the day before, I think 2 days ago. And this was Brian Armstrong. Basically, he acknowledged, he said, today, Coinbase received a Wells notice from the SEC focused on staking and asset listings. A Wells notice typically precedes an enforcement action. And then there was a comment from somebody that said, can you please explain this in NFL terms? And I think this is the important part. And I think this is one of the issues that we are seeing within our the crypto ecosystem today, and not only the crypto ecosystem, but thinking about it in the Western world and specifically in the U.S., staying at the forefront of technology and development and evolution, and being a part of this ever-changing world. His response, I think, is pivotal because it really makes sense. Brian Armstrong's response was, imagine you've got both football and soccer refs on the field, but you're actually playing pickleball, which is the fastest growing sport in America currently. The refs, which are refs of two different sports, can't really agree on the rules of this new game. And then one of them decides to change a call that they made back in April of 2021. That's essentially an excellent sort of framework as to what the institutions within the crypto ecosystems are dealing with right now. Because one, there's no playbook. Two, I know, Brian Armstrong, the CEO of Coinbase himself, has come out and said he's reached out specifically to the CFTC, but specifically to the SEC, specifically to other government bodies. And I know it's not just him. I know it's other institutions as well, Kraken, Binance. They're all eager to, one, see the adoption rate grow and the ecosystem grow. And in order to do so, they also know they have to play ball in some sort of aspect. They have to be tactful in how they are integrating and acknowledging their displacement of entrenched systems and entrenched financial assets and bodies within government frameworks. But asking, say, okay, what's the playbook? What should we do? And, there's been no rule book. There's been no guideline whatsoever. And then we see stuff like, Gary Gensler, who apparently understands blockchain and was a blockchain professor at MIT. The question is how much is what he's doing being shaped by bank lobbyists and government, financial institutions, sort of players, trying to quell the growth of crypto in that ecosystem. But we've talked so much broadly about all this regulation stuff and banks failing, and do you see, feet to the fire, do you see right now, on a 0% to 100%, the narrative shift? Where do you see us on that scale of more broadly the mindset of institutions and people looking to Bitcoin as an alternative, and also a store of value as an alternative to traditional finance? Where do you see us on that scale currently at this stage in development?
That's an interesting way to put it, right? I don't know, percentage wise, how far into it we are in terms of, 100% being like, full adoption, right? But I would say we're still, 5 to 10 years away. And it all depends on how quickly, that does materialize, because I think for a lot of people, crypto and even Bitcoin specifically are just viewed as a speculative risk asset, right? It's people, particularly millennials and people, 35, 40 and under, who are basically trying to get rich quick. Hey, let's go speculate and gamble, and, hopefully we'll go roll the dice, and, we'll wake up tomorrow with, win Lambo, right? And so I think for even a lot of people who are in the crypto ecosystem, they're not necessarily here for the decentralization aspects, the permissionless nature of even something like Bitcoin as a monetary network. And, full transparency, I'm not a Bitcoin maximalist, but I certainly lean that way, right? And so for me, like right now, I don't own anything other than Bitcoin, for example. I will trade some alts occasionally, but I try to stay away as much as possible. And so, I always have to remind myself that, the market is the arbiter of truth. And right now, overwhelmingly, the market's perspective is that Bitcoin and crypto are risk assets, right? And so I can look at Bitcoin and view it, as being a non-risk asset, because I know with certainty what Bitcoin is, what the future monetary policy is, what the inflation rate is. And then when I look at the fiat ecosystem and I just see, the only guaranteed certainty is that we'll continue to print money. From my perspective, like over the long run, from my perspective, if that's our denominator that we're pricing all other assets in, all those other assets should do very well, right? And particularly the ones that are more scarce. And so that's why real estate's probably going to do well over the long run. That's why stocks are probably going to do well over the long run. And that's certainly why something like Bitcoin is going to do well over the long run. And so, I may think that Bitcoin is a non-risk asset, and that, it truly does represent this permissionless programmatic monetary network. But I guarantee you, even so many people who are in crypto don't view Bitcoin that way. And they just view it purely as a speculative investment tool, right? And so there's a transition process that we need to undergo, right? Because money is an asset, but not all assets are money, right? That's the key thing to understand, right? So a stock is an asset, but I'm not going to go to the store and buy groceries with my stock, right? It's not money, right? So money is a very different thing than just all other
By
assets.
the way, I want to pause you there because you just brought up a key point that I find so funny. The argument, which is I'm starting to see evaporate. It's not as pervasive now, but people used to say, but what can you buy with Bitcoin? And I'm sitting here thinking, okay, you bought gold, you've traded gold, cool. Say somebody that's like a super gold bug, 99.9% of everybody that owns gold owns a digital representation of that gold. And they're arguing about the veracity and the truth in Bitcoin, and also saying, well, you can't buy something with Bitcoin. Meanwhile, what are they buying with their Amazon stock? Nothing. They're storing their capital in that investment of the share of that company in hopes of that company, expecting that company to go up in value based on its growth in services and adoption of users of its network. And that's essentially exactly what Bitcoin is. It's a network that basically transfers the energy that was harnessed, whether it be from hydroelectric power, green energy, or burning coal and turning a steam turbine. It doesn't matter what the aspect is, transferring the energy to through mining into a store of value that is proven of the energy represented to make it. And it's, there's so many differences, but so many comparisons between traditional assets and Bitcoin that it's the arguments that have seen their way to now, or people are starting to become aware of all these things. So I know we're going to be wrapping up here in a few minutes, and I've got a couple things we're going to have to do here on the stream. But before we go, I do want to, say thank you so much for coming on, Caleb. If anybody that's not following him, you can see his @ symbol right below his beautiful face there. I got it blinking right now. Make sure you go and follow him. But I wanted to ask you, where do you see the highest likelihood, and you can give, let's say, a $5,000 range for Bitcoin to be at the end of Q2? And do you think there's going to be any sort of separation and correlation between Bitcoin and traditional markets that's going to be longer than a 1 or 2 week period throughout between now and the top of whatever the next all-time high is?
So I'll start with the second question first, which is that I don't think we will see a sustainable divergence between Bitcoin and other risk assets like equities. I think that the correlation that we saw, become very predominant during 2022, all assets correlations basically went to one. Stocks were selling off, bonds were selling off, gold was selling off, Bitcoin and crypto were selling off, right? I think that kind of general dynamic will persist both to the upside and to the downside, right? And so this is a macro dominated market environment, and depending on how macro evolves, assets will also evolve. And so that's my perspective there. In terms of price targets for Bitcoin over the next 3 months, volatility is going to be the name of the game. And so, that could basically mean we're up 15,000 from the current price, or maybe we're down 15,000 from the current price. And I'm not sure exactly where we shake out on that. And so I'm just going to go ahead and default to kind of the thoughts that I provided in my 2023 outlook at the beginning of the year that I published on January 1st, which is that we should expect very choppy market conditions. And I think as these naked swimmers continue to get exposed and the Fed embarks on their tightening cycle, risk assets generally aren't going to perform very well. And so, I think it's very critical to remain defensive here. Like I mentioned at the beginning of the call, right? At the beginning of the show, right? Like I'm not chasing things. I don't want to be motivated by FOMO. I want to let the market come to me. And so I should have this written on like my mirror here in the bathroom at the Airbnb that I'm staying at, because it's like the reminder that I'm like, telling myself every day, be patient, don't FOMO, don't let these, 20-hour market pumps, motivate me to just go ahead and dump a lot of money. And I got to stick with my schedule here. And so, that's what I'm trying to do. In fact, I've actually paused DCAs because I feel like we're very much in a period of heightened uncertainty. And so that's kind of what I'm seeing there. And so, I don't know where we'll be in 3 months. I would not be surprised if we're below 20,000. I would be very, very, very surprised if we're above 35,000.
That's I've appreciated this conversation so much, really. And I know the audience here, everybody in chat. If you want to see Caleb Franzen back here again, Type in the entire alphabet. No, just throw a one in chat. Throw a one in chat. And again, big love and appreciation to you, Caleb. Really love having you on here. Love having you in the Hit Network sort of ecosystem. And, you and I have been doing things for a couple of years now, whether it be here on the BitLab daily stream or on my Crypto Answer podcast. And anybody, if you are interested in anything he has to say, and he's got a lot of wonderful things to say, make sure, where can they find out more about you? Where can they find your Substack? Where are you talking next?
Well, thanks for having me, Kelly. Funny enough, I think you and I got acquainted last February in a group chat on Twitter. And so it's literally been amazing to kind of continue to build our friendship and working relationship together. I'm always super appreciative of the things that you've gotten me involved with. So thank you so much for having me. It's great to be able to come on here onto your platform and try to spread some of my message and just market thoughts. So I really appreciate it, Kelly. Let me go ahead and just share my screen on this really quick so people can go ahead and check this out. This is my Substack, cubicanalytics.substack.com. I'm doing a Federal Reserve special right now because the Fed just raised rates by 0.25%. So I'm doing a 25% discount on the premium newsletter, but definitely just come out, check it out for free. You'll get free weekly updates from me covering macro, the stock market, and Bitcoin. And just come check out the work that I'm doing over there, right? It's literally a free newsletter that you'll receive every single Saturday. And if you want some more thoughts from me, other benefits, you can read what those are here to sign up for either a monthly or annual subscription. All I'm trying to do is do my fight against inflation. So I'm offering that 25% discount, but come check me out there. Come check me out on Twitter at Caleb Franzen. We're growing like crazy. I think right now we're just about to pass 4,700 total subscribers here on Substack. So we're growing like a weed. You could read my 2023 market outlook right here. You could read, again, I'm doing weekly updates. I'm doing twice a week for the premium, so on and so forth. So hopefully adding a lot of value there, and the community is growing like crazy. You could even look here. Just one last thing is how much we're growing here in terms of all subscribers, almost closing in on 4,700. Is this not going to load? There it is. Okay, there we go.
Going parabolic.
So,
I love it.
we're growing like bananas. So come check us out. Come be a part of the community and check out some of the research that I'm sharing there.
Oh, I appreciate it so much. Thank you so much again, Caleb, for coming on. Everybody give him a round of applause. You can clap your heart, say thank you. And hey, man, I hope you have safe travels, and I look forward to having you back on, and you and I will be talking offline more as well, I'm sure. And we'll be checking in on our traveling correspondent here again soon. So again, thank you so much for coming on, Caleb. We'll go ahead and wrap out the show with some TA for the audience here. And again, I will see you again next time, my brother.
Thanks, Kelly. Peace out, man.
Later, brother. All right, everybody. Man, how'd you like that? Isn't Caleb? He's such a smart fellow. I really appreciate having him on the space and able to share his thoughts and wisdom and look at not just looking at a Bitcoin chart or not just looking at Ethereum or Cardano, but actually broader market context. What's going on with banks? Does it mean that Bitcoin is immediately going to pop today or tomorrow? No, it doesn't mean that, but it does. He obviously very much so supported the idea that we are underway in a narrative shift, but this is going to take time. So before we wrap out the stream, let's go ahead and look at some of the prices. Let's look at some of the markets. What's going on? If you have not yet, hit that like button, hit that subscribe button. We got 200 people watching now, 153 likes. And if you have not yet, make sure you come over to the BitLab Academy page right here. This bank failure is dominating the news. Retweet this. You'll be entered to win either the indicators or the courses. And that will be listed. That will be said basically on air on Monday. Actually, it won't be set on air on Monday because I'm going to have to release a different video. I have a meeting that day. It will be released. The winner will be picked on Tuesday. There will be a stream Monday, but it's just going to be a pre-record because I have a meeting that morning. So before we wrap out the stream, let's go ahead and look what's going on. Dominance looks like market dominance. Bitcoin still on the rise here. Total market cap for all altcoins taking a nosedive. We're seeing USDT dominance kind of flattening out here at this level. If we pull up the actual drawings here, it's right at a critical zone right here. Let's go ahead and look at Bitcoin. Yesterday, I, of course, talked about the thumbnail was, of course, and topic of the stream yesterday was about Bitcoin potentially coming to the downside. Why was I thinking that? Because we have to look to the momentum on the charts, and we can see just by the nature of these these highs rolling over. This is a rounding top. Let me draw that better. This is a rounding top showing momentum waning. We saw an attempt by the bulls here. The bears immediately ate this back up to the downside. As it stands right now, I would lean towards the likelihood being higher for some sort of at least small market pullback. Doesn't mean price can't absolutely rip through the moon here, but one of these two lines here, this red or orange line coming down, testing either this zone right here at 25,700 or further down at the this 26, basically 26,000 range, or down to this level that Bitcoin was fighting to get through, where this high volume node is also right about the $25,000 level. That is if we don't hold above this previous low, which is at 26,720. So we got to keep our eye on that. Let's go ahead and look to some other coins. Cardano still within this channel. If we lose this low right here, 35 cents, I am looking to come down to 34 cents. You can see the price here on the right, 34.2 cents, 34.3. If we lose that level, then we are going to be looking at further downside. Let's go ahead and mute the indicators here. Now, what do the indicators tell us on Bitcoin? Let's go ahead and look at that. I will be doing TA on BitBoy after this show, so let's go ahead and just get a general rundown of what's going on. We had the call here for the breakdown with the divergences. We had a lot of overweighted sort of bearishness with these red waves showing this was overheated. We can also see we had the blue wave here showing a likely market bottom. We bounced from there. We also have bullish divergences. As soon as we got to this level, this price action previous support flipped to resistance now. That also was supported by the notion of seeing two bearish divergences here with the Chaikin money flow. We're on the 4-hour chart, of course. Chaikin money flow. Also, we saw this flip to red showing the momentum, various aggregate different momentum indicators were showing that that they were on aggregate showing overbought, overheated zones. And this was right coming into bearish divergences as well. So this made sense that this came down. Now, if we come to the, let's look at the Heikin-Ashi candles here. We can see that we did not get the same signal there on Heikin-Ashi. This is why it's good to go between the traditional candles as well as Heikin-Ashi candles. But we did see this after the retest and then the rollover here. We're getting now a money flow index and bearish divergences here on the volume, which was signaling weakness at this level. Now on the small pullback, we did get a lot of relative extreme of flipping to the downside, sticking outside the clouds, showing support at this level. So as it stands right now, very neutral on this, but the general structure is suggesting further downside. So before we go, I'm going to have to come back to my main screen because I need to link my, I need to link the BitLab. I need to link the BitLab account to the, to this name picker because we do have a, we do need to pick a winner from all those tweets that were retweeted from yesterday. And this will be for a 3-month membership to BitLab Academy courses. And this is the tweet right here. Let's go ahead, copy link to tweet. Now we're going to put it right here. Now, okay, now we can now share the screen. This is the tweet right here. And this is the tweet from This is a tweet from yesterday that we are doing, and it's for anybody that had retweeted this yesterday. And again, shout out to everybody that's a part of the community. Hit that like button if you have not yet. Join our community. Hit that subscribe button. Ding that bell. Let's go ahead and see who the winner is for 3-month free membership of BitLab Academy. And we are going to make sure all these things are... If you've already won, by the way, we're going to move on to the next person. Just to make sure we're getting different people. Now we're going to maximum age group. Now, how do we start contest? Boom. How do we do this? Winner, retweet, boom, boom. go ahead and relog this. Okay, give me 1 second. Give me 1 second. I gotta log in. Authorize app. Boom. Now we can do it. Okay. Now this is a tweet. Okay, this is a tweet. Now, how do we pick the person? I did this yesterday and start. Type of contest. Winner from retweets of a tweet. Okay. Now. All right. What we're going to do is everybody in chat, whoever puts the first number, put a number between 1 and 40. Whatever the first number that pops up is, I'm going to count on the retweet here. And whoever is that person, that is the person that's going to win. The first person that I see, the first number that I see is going to be the person that wins. We will count, let's see, between 1 and 45. If the number, okay, 40. So we have 45 here. So we'll count down from 5 back from the very end. 1, 2, 3, 4. Alan Jardine, right here. You are the winner. You are the winner of 3 months course membership. I will get in touch with you after the show. Everybody, I hope you have an absolutely wonderful, wonderful day. I see there must be 2 different counts here. Alex Green says Iman Perry. So we'll do 2. We'll be giving 2 giveaways. Alex, get in touch with me with that person just to make sure there was no issue there. Iman Perry, and then the other one that Alan Jardine. We will go ahead. We got 2 winners today. If you have not yet, make sure you come over to bitlabacademy.com and sign up for the newsletter. I will be sending out a newsletter this weekend, updating what's going on in the markets, showing you some signals, showing you some everything going on. And you also get entered to win a free month access to the courses and the indicators. We've got all the updates we are working at. Beta release is coming here in a matter of days, and then the main net's coming right soon after that. So shout out to everybody that is here in chat. Thank you so much for being here. Hit that like button, hit that subscribe button, comment in the side right here, and comment below if this is later. Let me know what price level. Give me a $5,000 window. Where do you think price is going to be at the end of Q2, which would be, I think, in, let's see, April, May, June, at the end of June? Where do you think price is going to be? Comment and let me know. What coin in the top 10 do you think is going to perform the best against Bitcoin? Let's see your answers. I want to see them in the chat. I want to see them commented down below. I will see you all in the next stream. It is Friday, so I will see you on Monday. Hope you all have a wonderful weekend. Adios. Adios, muchachos. Thank you for coming. Thank you for tuning in again. Hit that like button. Hit that subscribe button and ding that bell. Have a great weekend, everybody.